Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
Yo, what is up, traders? What's up, zingers, future traders, traders of all account sizes? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, sponsored by Apex Trader Funding. We've got a great show in store for you guys. I'm going to give you guys some tidbits about Apex Trader Funding and how you could get funded with them and take out payouts. I'm also going to go over some market environments and some market cycles as well. Where are markets currently trading? Do we have a good trend right now? Or are we range bound? Good morning, Yassine. Good morning, hello, and welcome. So let's get into some slides. I'm going to show you guys some basics of what is Apex Trader Funding. I also have some slides going over their rules, the 30% rule, which a lot of people have some worry about, which isn't that bad of a rule after all. And I also have some tips and tricks for different account sizes. So on today's agenda, I'm going to go over how Apex Trader Funding works, live market insights and trade setups, and we're also going to be doing a free Apex Trader evaluation account giveaway. So make sure you guys stick around. That will be in the comments very shortly. So why trade? What's going on, Ozzy? So why trade with Apex Trader Funding, guys? Apex Trader Funding gives traders access to funded accounts, removing the need to risk your own personal capital. And that's what sets Apex apart from having your own account when you're getting started in trading, because you don't have to risk thousands of dollars of your own capital to learn how to trade, and you still have the ability to take payouts. So it's not like your paper trading where you're trying to find your groove. It's almost paper trading with the ability to take payouts. So you are putting a little bit of your own money up front. That's for the evaluation fees and then the funded fee. But after that, that's the only capital you put down. So let's say right now there's an 80% sale. So a 50K account is $33. They also have on sale one-time PA fees for $140. So let's say you buy an eval for $30, you pass it, you get funded for $140. You're putting only $170 of your own personal capital at risk. And if you're able to stay consistent on your funded account, you're able to take as minimum of $500 on your first payout. And depending on your account size, you could take out as much as $37.50. So let's go into those accounts as well. I do want to give you guys some more information on Apex. So it gives you access to firm capital to trade futures markets. So we're not trading options, we're not trading stocks. This is strictly futures markets. You're on 90% of profits, but it's 100% of the first 25K you make, and there's zero personal liability. Guys, you could get on a funded account, say it's a 50K account, you have a trail stop of 2,500. If you blow that 2,500 and you lose the account, there's no penalty. Apex doesn't come after you for that 2,500. They say that's okay. Go right back to an eval and start on over. It's an effective and efficient way to scale and grow as a trader. Guys, when people have good risk to reward, maybe you're consistently risking 100 to make 300, but every time you try to risk 2 to make 6, psychologically, you have a tough time holding. Well, what's great with Apex is if you have copy accounts, you could still risk your 100 to make 300, but have that copied to as much as 20 different Apex accounts. So it's a 3-step process. Step 1 is you pass the evaluation. They give you an eval. If you're able to hit the take profit goal by the end of a day, whether it's 1 day, whether it's 8 days, whether it's 30 trading days, take your time with it. Take the time you need, because remember, guys, your trading journey and the market conditions are always going to be changing and different from the next guy. Then you're going to get funded. Once you pass that evaluation, you're on a funded account. They give you the same profit goal. And after that profit goal, you're able to start withdrawing profit. So it's really a great way to take money out of the market and have very low personal liability. And step 3, of course, is withdraw profits. You keep 90% of your earnings, and again, 100% of the first 25,000 you make. There's no long-term contracts, flexible rules, and scalable opportunities. You could trade with Apex, guys, on Monday and then not trade it till the next Monday, and your account is still active. They aren't going to cancel your account. There is no inactive fee or inactive shutdown. You're okay. Take your time. If you need to skip a day here and there, that's all right. That's almost the point of trading, guys. The whole point of trading and becoming self-sufficient in the market is that we could be our own bosses and take our own time with it. Guys, don't forget, win a free Apex Trader evaluation account. Fill out the link below. There's a form. Get a chance to win a free Apex account, whatever size you want, whether it's a 25K all the way up to a $300,000 account. So right now they are running a sale, as I mentioned before. They have 80% off. Use discount code FFEVER for Futures Fever. This ends July 8th. They have $50 resets. This is another great sale, guys. Now, some people see the $50 resets and don't think it's that necessary of a sale. However, it definitely is, because if we're buying a 80% off on a 50K account, I'm going to show you guys on Apex's website how much these accounts are. So right now they have 80% off for another 6 days. Let's say we bought a 50K account. 80% off is $33. Use code FFEVER. And now let's say 2 weeks goes by, I'm on the same account and I blow the account. Well, instead of waiting for the monthly fee to hit again, I could reset the account for just $50. Whereas if I don't have that reset, I would have to pay at least 50% of this fee. So even the $50 resets is another great add-on to the sale. Lifetime one-time PA fees for any account size right now is $140 for the one-time fee. This is another fantastic sale, especially if you're looking to get funded on a 50K and higher, because those are usually around 160, 170. I know the 150K accounts are about 240 to get funded. So this is another great sale that we aren't putting up that much of our own personal capital thanks to Apex. So last week's winner, guys, was Gopal. Congratulations, Gopal. Guys, make sure you hit that like and subscribe button. We're going to go over some market context. I'm going to show you guys some trade setups. And if you want, let me know in the chat if you want me to cover some supply and demand basics to help give you guys a little bit of structure in your trading. Guys, join me every Wednesday here on Benzinga at 11:30 for Futures Fever for a chance to win. Don't forget, fill out that form in the comments below, and I will bring us to some market analysis. And then, guys, I have some slides for later going over some futures basics and some rules by Apex. But for now, let's pull up some ES and some NASDAQ and see if we have any trade setups coming in play. So the first thing I always do whenever I do my top-down or my market analysis, we call it my pre-market prep, is I like to look at the top-down analysis. I'll start on the daily and then break it down. So let's zoom in, and what I do is I'll mark out previous day high, PDH, previous day low, PDL. Once I have those marked out, it sort of helps give me some sentiment and some idea as to where the market might be heading. And what I also do, guys, a great tip for helping you guys spot trend is look back at the recent price action. I noticed since Monday, we've been breaking previous day highs and closing green. We did it again here, broke previous day high. Now, even though we didn't close above previous day high, this candle still closed green. So it seems like 1, 2, 3, 4, 5, 6, other than yesterday, which was Tuesday, 5 out of 6 of the last trading days, we've been breaking previous day highs and we've been closing green. So even if we were checking that stat 2 days in, 3 days in, we're getting the idea and we're getting the trend to say, okay, we're bullish right now. We're not really breaking those previous day lows. We're holding previous day lows. We're breaking previous day highs and we're closing green. My daily time frame, if I'm a day trader, guys, I know a lot of people, I covered this analysis on a video and somebody said, well, Kevin, that's great. I know that we're bullish, but I don't really like buying at the highs like this. That's a fantastic point if we're long-term investors. But as day traders, guys, we want to trade with the momentum. So when we're moving higher in the market like this, we don't want to try to short every pop because we see that these pops are living and making it through to another leg. If we saw that the pops were failing, like we see over here in the choppy price action, that's another story. But at this moment in time, we're still bullish in the market. So we should really only be looking for long positions if we could find a good entry. From here, I go from the daily. What I also like to mark out, though, is our opening price. Now, that's very helpful because we could keep an eye on our open price throughout the trading day. Because if we're above our open price, we can know to look for bulls. If we're below it, we could look for bears. Or on the other side of that, let's say we took out previous day high and we pulled back and we're currently below the open price. Well, that could give me a great buying opportunity because I'm expecting price to continue higher as the trend is suggesting. And that would be if I have demand zones lining up below that open price, right? So this is my top-down analysis to find our trend. Now I would break it down to a 4-hour, see if we have any demand zones. I don't see anything. I recognize that price has been choppy since Monday, Tuesday, and now today is Wednesday. We're looking to buy the lows, and it looks like we're trying to sell the highs still. So we can break it down to a 3-hour, really just going through different time frames to see where is there some structure. Right now, if I turn my drawings off, there's not much structure here at all. It's very range bound. In fact, what we'll do is we'll go to the ES chart of the ESU contract. That's the September contract. That way, all of my drawings are turned off and we could start over. So let's go back to that previous day high and low real quick. We'll mark out PDH, PDL. That's our previous day high. That is our previous day low. And again, this is just something very simple that anybody could do in the morning to help gauge direction and help gauge trend. Guys, as day traders, we should be trying to simplify our system as much as possible without dumbing it down, if that makes sense. We want to keep it simple where we look for, if this happens, then I'll do this. If that happens, then I'll look for this. If the market reacts off of this zone, I'll look for continuation, or whatever the case may be. There should always be an if factor when creating our systems. A lot of traders who look to just trade momentum, they're just trying to get in and out, well, they're going to have a very tough time. Let's say you were looking to trade momentum off of this big sell-off right here. Well, this big sell-off candle, a lot of people might have thought, oh, we're rejecting previous day high, we're moving lower. But if I use my own analysis on this, which involves a volume profile, I would mark that out from our open, and I would recognize that, hey, guess what? We just pulled back even before we had this candle. I'm going to show you guys replay mode before this candle. So right now, at this point, markets were moving higher, and this is our volume profile. So this shows volume a little differently than our subgraph volume. So our subgraph volume shows us volume on that candlestick, so for that time frame. And our volume profile shows us volume at each price level, depending on where we started at. So I started this one on our 9:30 market New York session opened. I saw we had a bullish trend, and now I see that we have our low volume shelf right here. So this is an area that I usually like to see the market retrace, test, and that would be my entry. So even though, yes, we had a huge pullback right there, a lot of people got trapped at these highs because they were buying the highs. They got stopped out. And guess what? What happens when people try to get in a long position at the highs, they get stopped out on a huge red candle like this. I'm sure a lot of you will relate. You go, oh man, I was just long up here. I got stopped out. I was wrong. I got to take this short now. Then you take it short. And what happens? It gives you another stop hunt. So be patient and follow that trend. Our trend today was bullish. This was just one red candle. It was a strong pullback. This is something we like to look for confidence in the market. And what happened? We ended up pushing and we held that area very nicely. Very nicely. I do think we ended up making our way to a new high a day. Yup. It took a little while, but we did end up holding this zone at 62.54. And we double bottom there on the 5-minute. If we zoom into the 1-minute, we'll see a bit more of a clear double bottom. So we have 1 wick, 2 wicks. This was our basing and then our pump. So this was a pretty clean trade. This was a trade that I took personally, guys, with our community over at Bullish Bears. You could join. It's only $50 a month, bullishbears.com. I live trade there Monday through Friday. But volume profile, volume analysis, it's very simple. It's an easier read, and it helps give us an idea of direction and market sentiment. So now that I had that zone marked out, that works very well. Let's see if we have any other trades setting up. So let's delete our volume profile for now, and let's go back to our top-down analysis. So here we have our 2-hour time frame, and I'm really not seeing too much in this 2-hour. We sort of have a basing candle right here, which could work as an order block, but the reason I wouldn't mark this as a demand zone is because it lacks follow-through. Now, usually with the demand zone, I like to see something more along the lines of this down here. So check this out, guys. On this zone, I'm going to zoom in. We're going to look at it for a moment. This zone, we have our basing, which would be our red. So this is a demand zone. So we're going to make this a green. Let's make this green. So this would be a demand zone. So we have our basing candle, which would be a red small body and a long lower wick to the downside. This shows me that at some point, this longer wick was a full body. There were a lot of people trying to short the market here. What happened, though? This 2-hour candle ended up wicking higher, closing higher. Then we had a very strong impulse move to the upside. Now, that's usually the main formation I look for a supply or demand zone, this in this case being a demand zone. But what really solidifies that strength of that zone is if we have continuation. So look how we have our basing, we have our impulse, and then we have some continuation afterwards. So this would be a very strong valid demand zone. I would look for long positions. Now, Guys, guess what? This is a 2-hour demand zone, and this is all the way at 61.69, and we're currently trading on ES at 62.53. So yes, it's great I found this demand zone. However, there's a good chance we don't trade down to it. For us to trade down to that demand zone would require us to sell off about 94 points on the ES. At that point, I probably would be second guessing if we should be taking longs if we sold off that hard. So it's important to mark out these supply and demand zones because it gives us an understanding of structure, because if we're moving higher while creating demand zones, that means there's structure behind us. We should look for continuation. Or if we see something like we see over here, then we can expect range-bound price action because we're not creating supply zones when we sell off, but we're also failing to create a strong demand zone down here as well. I believe I had a 30-minute or a 15-minute demand right over here. Here we go. Perfect. So we're going to mark this out. This was my 15-minute demand that I've been looking at for the past trading day or two. So this formed on Monday afternoon. We can make this green. Guys, let me know, what trading strategy do you guys use in the market? There's the opening range breakout, the orb strategy. That's when you mark out the 15-minute high and low. There's the gap fill strategy. There's, of course, supply and demand. There's ICT concepts. There's all these different concepts and trading techniques. What do you like to use? What would you consider yourself as an expert on, right? When we're traders, I consider myself an expert with supply and demand because it gives me my foundation and it helps me set my rules for consistent trading. Do you find yourself using the opening range breakout frequently? Do you find yourself even using previous day high and low the way I had it marked out too? Some people use a Fibonacci retracement. Somebody here says they do a lot of YOLO. That's not a good strategy. You got to be careful with that one. YOLO is a tough way to trade, my friends. Got to be careful with that. Even if you know something as basic as supply and demand to give you a little structure behind it, that would help you, right? Because that would help gauge, say, okay, well, supply and demand, I have a supply zone up here. I have a demand zone down here. We're at the bottom of our range right now. I don't want to take it short. Because remember, guys, at some point in the market, it didn't look like we were holding over here. At some point in the market with our replay system, we see that, hey, at this point, this is Tuesday at 8:15 in the morning. It looks like, and for any traders who don't have a basic understanding of market structure, supply and demand, order blocks, things of that nature, even just previous days lows like the range, they don't have their drawings. And what happens is they go, oh, we're selling off right here. I'm going to take this short. And they end up selling the lows. Guys, that is not our goal. As traders, we don't want to YOLO. We don't want to sell the lows. We don't want to buy the highs. We want to buy the lows and sell the highs. Markets tend to range 70 to 80% of the time historically. So with that being said, to understand a strategy and a system that works in range-bound price action is ideal. It is a necessity. So what happens, guys? People take these shorts at the lows. They get stopped out immediately. What happens again? They get stopped out. They try to take a long here, and then they get stopped out of their long immediately too. So got to be careful. Those are the traders that are buying the highs, selling the lows, right? Just like I just mentioned, we don't want to wait for us to break out up here and try a long position. We'll get stopped out. We'd much rather wait for a pullback to the bottom of the range. We don't want to sell the lows and expect a breakdown. We want to maybe wait for the reaction to those lows. Do we start to hold, which would give me a bullish sentiment, or do we sweep it and reverse back higher too? That's another great trading strategy, guys, is to mark out previous highs and lows and wait for the market to react. A lot of times there's retail traders looking for a breakout of specific levels, and once we get that breakout, we end up reversing. Let's see, where are we currently trading at right now? But I do either buy backside long or form a high of day. Nice. Okay, good stuff. I like that, man. Good. As long as you have rules in place, guys, right? Even something as simple as waiting for a 5-minute candle to close before you enter, so you know you're not counter trend trading, right? Another thing I like to teach people is when you're trading, let's say you do your top-down analysis, you find a zone on the 2-hour time frame, you're not going to want to enter a 2-hour zone on a 1-minute chart. A 1-minute chart's going to give you extremely false signals, especially if you're in a zone from time frame analysis on a much higher point. So if you're doing your time frame analysis and you see a zone on the hourly, the 2-hour, or you see those pivots on the hourly, the 2-hour, then we definitely want to go no lower than the 5-minute chart and keep an eye on the 15-minute as well, because these are the candles that when we zoom into the hourly form and sort of give us an idea of if we're creating a rounding top, rounding bottom, finding support, finding resistance, or continuing lower. Now, of course, guys, you could use tools as well like Bookmap. Bookmap is a fantastic tool. I use this one every day in my trading. We find passive sellers, find passive buyers, really just a fantastic tool. And this also helped me find that long position. I'll show you guys on that 5-minute again, where we found these longs off of this low volume shelf. So guys, looking at that, yeah, that's right, guys. Smash up that like button, run it up, guys. We're dropping golden nuggets today. If you learned anything, I want you to hit that like button. Join me next week for another episode of Futures Fever. And don't forget to fill out that form for a chance to win a free Apex Trader account. I'm going to make sure we pull that up right now for you. It's going to be right over here in the comments, guys. Fill out that form for a chance to win a free Apex account. And make sure you hit that like button. Show some love. That like button is free to press. So 5-minute. As we see on the 5-minute, we'll do our replay system one more time on this. And again, we see that markets aren't really giving us an entry. We maybe have a fair value gap right here, but that's about it. If we mark this out as an FVG, we'll make it like a blue. I'm pretty sure we ended up breaking it on the pullback. We wicked the bottom of the fair value gap very closely. But now what happens, guys, is you could use a fair value gap along with the volume profile. So again, if we were looking back here and saying, okay, well, where's my entry on a pullback? Well, let me put up my volume profile at the New York session open, because now at this point it was around 10:30, so we have an hour's worth of data to use. And I see, okay, volume consolidated down here. We have a few low volume shelves. We have one over here around this 54 to 20 to 52. And it seems like we have another one down here too. So you can mark out those low volume shelves and you could sort of wait for the market to react. Now, some people might ask, well, Kevin, how do you know which low volume shelf you're going to look to enter on? Well, guys, we're going to be waiting for the market to give us that answer. So right now, because we have a low volume shelf closer to price, we would want to go with this one, the one that's closer to where price is currently trading. We wouldn't want to go for this further one lower. We'd want to make sure and see if price can hold this and continue. Now, guys, here's where market analysis along with our technical analysis runs in play. So because I knew markets were very bullish this morning and we have been seeing continuation, that also gave me more confidence to take these longs right at this low volume shelf, because I saw today we sort of just ran up. Ever since it was about, what's this, the 955 candle on ES, we just ran up. We had 1, 2, 3, 4, 5, 6, 7. Then if I show you the next candle, that's going to be 8 green candles in a row on the 5-minute chart, right? So a lot of people I know at this point are saying, oh man, we're breaking previous day high. We're continuing higher. It looks like we're not pulling back at all. I got to take this long here. I'll put my stop at that recent 5-minute low. Guys, we never want to chase. I can't stress it enough, right? Because guess what? This person takes this long here. It starts running into profit. They think they're doing great. Boom, huge pullback stops them out. Same situation occurs. We find our pullback. We find an area that should be our entry point. And instead of taking shorts off of this pullback, we take longs with our volume profile and our fair value gap now, because now our volume profile is giving us a confirmation to our fair value gap to say, okay, this is definitely looking like it's lining up. High probability trade. I'm looking to take this now. And that's exactly what we ended up getting when we play that through. And yeah, we're currently trading near new highs again. We could X out of replay mode for a moment. Now, guys, I want to show you a little trick that I like to use when trading ES and NQ as well. Now, obviously, I use the volume profile. Fair value gaps are pretty helpful as well, but volume profile shows a lot more of the inefficiency and the actual imbalance. A fair value gap is just sort of giving us the candlestick structure, which is important too, but volume is really what moves markets. So let's see. So what I like to look for, guys, when I'm trading the ES and the NQ, is I like to look to make sure that the weighted index is also trading along with it, as well as equities. Apple, Microsoft, Meta, Tesla, Nvidia, Amazon. These are all large cap stocks. I'm going to pull them up right here. These are all very strong large cap stocks that tend to trend with the ES and NQ. So if I notice that, hey, guess what? Today, Meta, Tesla, Nvidia, they were pretty bearish. I want to be careful on the longs. But guess what? Today, what we got was very strong momentum on Nvidia. It had a bear flag, pulled back to VWAP, and then had a strong spike higher. I'm pretty sure we made a new all-time high. No, not yet. We made all-time highs on Nvidia Monday night around 159, but during the New York session, at least, we made all-time highs around 158. So pretty clean stuff. Great to see, guys, NVIDIA back at all-time highs. That's huge. Guys, let me know if anybody here is invested long-term into some of these large cap stocks. I mean, Microsoft also. Let's do a quick run through these equities on some higher time frames. And let's see what's going on. So, right, we have this is Microsoft. Microsoft broke this recent all-time high from July 2024. Look at that. It's breaking it in June 2025, July 2025. All-time highs were hit around above $500 per share on Microsoft. Guys, that is huge. $500 per share on Microsoft. Back when just a month ago, it was trading between, even 2 months ago, was just April and May, was trading between a range of 380 to 440. Now we're all the way up towards that 490 point. If I was looking for any support on something like Microsoft here, I'd probably mark out this last area of resistance and drag it out. So I could say, okay, this was a point of resistance for a long time on Microsoft, even over here recently. And now that we're above it, it held as support once. So I'd like to see if we could perhaps pull back to about 470 for that long-term level. Yeah, you like day-to-day on equities? Equities are great to trade, guys. If you're trading futures, to have the ability to trade options as well is awesome because it gives you the upper hand to say, okay, well, today NVIDIA has more strength. I'm going to trade NVIDIA calls. Or today Microsoft has more strength. But whatever the case is, it gives you different options to trade off of. That's also why I like to trade things like oil and gold, because if the ES and NQ, like we see now for the past since 10:55. Let's say this price action has been going on all day, been very choppy, very range bound, not good volume, and it's just not giving us any continuation. Well, then I'll look over at a different market, whether it's gold, whether it's oil, and I'll look to see if we have any better setups over there. Now, something I want to mention on oil, guys, and we'll bring, let's see. Now, we'll keep this oil chart up. I'll delete some of these older alerts just to clean up our chart a little bit. This is a oil price level, no longer need that. That's a major key level too right there. Previous day high, previous day low. So something I want to point out on oil, guys, is that we had this green zone right here, and I'm going to make it purple so it sticks out a bit. But this zone right here, this held as support for the longest time. And when it was holding as support, it was giving some fantastic trade setups on crude oil. It was great. I loved it. I was taking 4-to-1s, 5-to-1s on oil. It's really giving us great opportunities. But once we were able to start selling off, this was about mid-January. This is when Trump started speaking about the tariffs that he's going to implement on Canada, right? So once that started happening, now Canada supplies 60% of the US's crude oil inventory. So if we end up with a new type of tax or some type of tariff on Canadian energies or oils, we're going to feel that impact on crude oil and our oil inventory. So something I noticed was this purple level, right? So we held it, we pushed higher, we had a weekly supply zone, we rejected it in January, we had a major sell-off, we mark out the high to this low, an 18% move to the downside in 2 months. After that, we had a small pullback for about 10%, followed by another major downside move on oil. I believe it went as low as, let's see, as low as 24%. It hit 52.49 per barrel. Guys, that is a huge sell-off on oil. Then once we were under this purple zone, we see even when we sold off on this first leg, we still held this purple level. So it still gave us some okay opportunities, but price got very range bound. Then we broke lower, we broke below this purple range, and it worked as resistance. Resistance and resistance. Now that we're back above it, I'm not really looking for shorts on oil. If we could remain above the 65 area on oil, or it's 63.37, I would like to remain more bullish on oil. Even though we had this massive sell-off right here as well, that's 17% in 2 trading days, from $78 all the way down to 64. That is huge, guys. This is something we do not see that often. US, this is CL, right? So if you were looking for a swing trade opportunity on it, you would trade something like USO. That's the United States Oil Index. So you would trade USO options or USO stock, and that would be for swing trading oil futures. As for day trading, I really like it to hold above the 63.50 because it gives me much better volatility and momentum. When we're below that $63, guys, we have a much lower ATR. We're below $60. We're in the $50 range. Very low ATR, very poor price action. Yeah, oh, Ozzy, man, I like it, guys. Hit that like button if you got your future fever going, guys. Love it, love it. Crude oil had a phenomenal run up here. Something I want to point out on oil is at 10:30 we had our oil inventory report. Now, when you look at the calendar, the economic calendar, and you have it for high importance only, today's Wednesday, we're not going to see that we have oil inventory. But when you turn off high importance, it does show right over here. We have, where are we? Today's Wednesday, 10:30. EIA, crude oil import change, crude oil stock change, Cushing crude oil stock change. A whole lot of oil news came out that wasn't a high priority because it's not something that highly impacts the ES, the NQ, these markets. But if you are trading something like oil, it is very important to be aware of when these economic events happen. It is usually near the beginning of the month. It's July 2nd, and they are normally around 10:30 for those oil reports. Guys, make sure you're smashing that like button. I do appreciate it. And get an Apex account while they're still on sale. They're on sale for the next week. Use discount code FFEVER. So here we got crude oil rejecting at a key level at 66.67. And we could take a look to see that we're pulling back from this point. If I zoom out, I do see that we're now making new highs, right? From the current range that we've been trading in. We're finally trying to break these recent highs. So something I would look for on oil is I'd really look to see if we could hold this new zone from 66.15 to 66.40. If we could hold this zone, then I would like to see oil continue its trade back higher. And let's take a look to see if we have any supply zones we may have missed from this area here, because if we don't have any structure, like we were mentioning structure earlier, without any good supply zones forming on this sell-off, there's a good chance the markets are going to try to rally back higher and get back towards its most recent imbalance, which will be this breaker block at 71.33. That's another $5 move on oil. And again, this might be even a possible swing trade that we could look for. But that would require some good market structure. And me personally, guys, I would be so careful if you are looking to swing trade something like oil. The volatility on it has been absurd lately because of all the economic and geopolitical uncertainty. Things have cooled down a little bit since the U.S. attacked Iran. That was this day here. We gapped up from 74 a barrel to 78 a barrel. And then we sold off from 78 all the way down to 64. So, a lot of people going, oh, I got to buy oil as soon as market opens up here because U.S. bombed Iran. Iran has a huge oil supply. It's going to affect China. It's going to affect China and U.S.'s trade talks because if the U.S. is attacking where China gets their oil, they're going to be very upset about that, which they were. However, it gave us our gap up. So anybody who was swing trading any positions on oil were the nice profits. But then while everybody, guys, I don't know if you remember this, but this was the weekend of June 22nd, that's Sunday. Before that, a day before that, same day, everybody was so bullish on oil. It was like almost everybody and their cousin wanted to buy oil. And at that point, we know markets love doing what markets love to do, and that's stop hunt everybody, right? And that's prove everybody wrong. If a majority, 99% of people are thinking oil's going higher, oil might go lower. And that's exactly what we got. A major sell-off here. It was insanity of a move. Oh, let's see. There was some recent trade news going on with Trump. Trump says U.S. struck trade deal with Vietnam. That came out a couple hours ago, coming out again right now. We'll see what details come out with that news headline, right, guys? We got to be careful, got to be aware of what's going on geopolitically and economically, whether it's trade deals, whether it's tariffs, whatever the case may be, whether it's war. We want to know what's going on because it's going to impact the market. And guys, if you don't know where to go for your economic data or news or market updates, there's always so many different places to go. Benzinga has some great offerings. They even have free accounts that you could sign up for with benzinga.com. You could see the economic calendar. And if you want to see the reports and how those geopolitical events come in and impact the market, follow me on Instagram, is Trading with Kev. You could also follow the Instagram of Benzinga, and that will also give you the opportunity to see some of these market recaps. I post every day to every other day if an economic event comes out, if there's some type of trade deal. Just recently, I covered the Trump's big, beautiful bill. I covered that 3 days ago. And just yesterday, it passed the Senate. So 3 days ago, I covered how it passed the House. It's going to the Senate. Now, a version of it passed the Senate. Now it has to go back to the House for final approval, and they're voting on that today. So we're going to see if that goes through or not. We'll cover it. We'll see what other economic events might be showing up as well. Could also do a bit of a market breakdown. Guys, don't forget, fill out the form in the comments for a chance to win a free Apex Trader evaluation account. Now, we give them away every week here on Futures Fever, so make sure you fill that out and join next Wednesday as well at 11:30. So this was oil. This is sort of what we were looking at on oil. On the hourly, we were trying to make some higher highs. We have been, in fact, making some higher lows. So even though markets have been fairly range-bound on oil, they have also been proving that they're trying to hold back bullish again. So that's just something to consider in the markets right now. So let's take a look at gold. Gold is another one I was looking at. Look how close we were. I was looking for long positions on gold around 33.43. It wicked off of 33.44, man. It was so close to giving me an entry. I was looking bullish on gold because of, again, the economic uncertainty. And check out gold right here, guys. I'm going to delete some of these alerts so they're not clouding up our chart. And I'll let you know. Come on now. Get on out. All right. So that is, I'll just move that there. So we have our previous day high, previous day low. We have our open price. So I was looking for a long position below our open price to target that previous day high, because I noticed on gold, we've been taking out previous day high, closing green. So I was looking for that same trend today. Take out previous day high, close green. So if I was given the buying opportunity below our open price, I would then get the opportunity to hold until we got back above our previous day high. And that's how we could also use previous day high, previous day low, and our open price to find really great trade setups. Because look at this, guys. This would have been a 9-to-1 risk to reward had it hit my setup. And that's not even with me tightening up my stop loss. Because, guys, 5-point stop loss on gold is pretty huge. Usually I only like to look for maybe a 2 to 3 point stop loss, and it really depends. If I'm using a tool like Bookmap for order flow, it really helps give me a precise entry, especially if I'm looking to sell with an ask or buy with a bid. It gives me a very clean, in-depth overview of market structure, and that's very important as a trader, beyond important. So let's take a look at our daily on gold. Now, gold, guys, is very range bound here on the daily. So I would not be so quick to take a trend trade, right? Because right now we're not at resistance and we're not at support. We're trading in the middle of nowhere. So the only information provided to us that we can use on this setup is what's going on more recently, right? Are we breaking previous day highs, breaking previous day lows? Are we range bound? Are we trending? Have we broken other prior day highs, right? So it's also important to mark out pivots on the daily time frame, because you got to remember, if you're marking out a pivot on the daily time frame, that's going to also show up on the hourly, 2-hour, those time frames as well. And these are major pivots. If you mark out a pivot here, let's say we marked out this one right here, and we'll make it yellow so we know that one stands out from the rest. If we looked at it on the 5-minute, let's see. So it's a major level on the daily. We wouldn't trade it off the 5-minute, because if we traded it off the 5-minute, we would have tried a short position here and got stopped out, short position here, got stopped out. We would use that key level to say, okay, do we have any resistance above it? Because I know with key levels like this, a lot of traders try to either take the breakout or try to take that exact reversal right there, right? And either one of those trades aren't going to work out. So what happens? I use a key level like this one along with my supply zone, and that's how I'm able to say, okay, now that I have some selling pressure here, this was pre-market. We could look at the time down here is around 8:30 to 8:40. We found resistance in supply. New York session opened right here. We chopped around until we got back to the top of our range in the supply zone where we have selling pressure. Markets proved to us we have sellers in here too. So everything was sort of lining up. We would have been able to take a short position off of the reaction. Now, entry-wise, guys, it's always going to be up to you, right? I could help teach you. I could help guide you. Anybody could help teach and guide you. But the common denominator between your trades, your good trades, your bad trades, your execution is going to be you. So you take your trades, you take what you're comfortable with, and you take what lines up in your setup and in your system. That's why it's so important to create structure around your trading system, so you're not trading emotionally. We want to trade with peace of mind, and we want to trade thoughtfully, so we're not getting stuck in our emotions. Now, if we took this trade as soon as we started rejecting, let's say we got that entry right back towards that candle open, wherever you're looking to enter this trade, it was an A plus trade, higher probability trade, because we rejected supply already overnight. We moved back into it. We got this big volume spike right there to give us our possible rejection. And that's what we like to look for. Volume lining up with our supply and demand zones, key levels lining up above or below our supply and demand zones. And that will help guide us, guys. When we're looking for trading, just like we look for anything in life, right? We want to learn something. We're going to take our time. We're going to ask questions, and we're going to expect it to be a little bit of a journey. Don't get into trading and expect right away to get rich quick. I promise you're going to have a much tougher time if you have that expectation and that mindset versus having the mindset of, how can I learn this? How can I be consistent with this? And how can I be consistent with my routine? Creating a consistent routine, guys, is the base of consistency in trading. Because if you have a good routine, good structure behind it, where you're saying, okay, every morning I wake up, I give myself an hour before the market opens, and I do my top-down analysis on oil, gold, ES, and NQ. And I also check my equities to make sure that they are either trend trading or range trading, so I know which direction, if there's a direction, to trade. All of these it sounds like a lot, guys, but I promise it's not, because once you create that structure, create a system, create something you could implement day in and day out, it becomes repetitive. And by nature, guys, humans, animals, all by nature, we do best in repeatable markets, repeatable situations, right? They always say animals, even humans, we're accustomed to routine. Create a routine, create some structure where you're following rules, you're following a system, not following emotion. Right now, if I was looking at ES on the 5-minute, I know this is a no trade zone. But if I was somebody who is newer to trading, I don't have all my levels correct, I might try to convince myself, oh, well, we're holding previous day high here. I want to go long. I want to take this right here and stop loss at the low, and I'll target the next supply zone we have, or the next key level we have, around 62.78. This is a 5-to-1 risk to reward. It's good risk to reward, so it must be a good trade. But that's not always right, guys. Just because it's a good risk to reward doesn't make it a good trade. What makes it a good trade is a good risk to reward, along with high probability setups. Are you buying at your zone, getting in a good entry, buying at a key level, whatever the case may be? Hey, good morning, Ava. How's it going? Hello and welcome, everybody. Good morning. I should say good afternoon. It is 12:15. I hope you're all doing good today. Hope everybody's going into this trading week green. It's Wednesday already. Real excited to see what tomorrow brings. And don't forget, guys, markets are closed on Friday. So New York session, markets are closed. There's no equities to be traded. But futures markets are open till 1 p.m. Eastern. Just something to keep in mind. But short week this week, guys. Monday through Thursday. Very good to know. Gotta remember that. Don't show up for work on Friday if you're trading the markets. So something here on NASDAQ, and I'm glad this is happening right now so I can show you guys what I'm looking at, is NASDAQ had this low volume shelf down here too, but I didn't end up taking this trade because it didn't end up giving me my entry, right? We didn't get our entry on this pullback. This was the pullback that ES gave us our entry. So we could see that, okay, ES gave us our trade. That would be the one too. Yeah, is it Mr. Producer? It's a half day tomorrow. Good to know, guys. Good to know. Very important. Nice, 9 a.m. Nice, dude. Good stuff. All right, so guys, here we go on ES. I'm going to delete this blue zone for a moment. I'm sorry, this is the NASDAQ now. Now, yesterday on the NASDAQ pre-market, I noticed that we were trying to move lower. And with these moves lower, so check this out, NASDAQ was much weaker. I noticed the previous day, we've been making new lows off of our price action. Every time we made a low, we pulled back though, but it still had more downside price action than upside. So I said, okay, guys, I want to be careful with NASDAQ here because it's got a lot more bearish momentum to the downside. We're creating some new lower lows lately. We haven't taken out any of these recent highs over here. We're creating bearish structure. So I was looking for this zone for a short position. Now, I'm always very transparent. I'm not going to tell you guys I took a trade if I didn't. I did not take this trade on NASDAQ, but it did line up very nicely. And I'll show you guys exactly what happened. So markets opened. And look at this perfect rejection. It gave us our pin bar trade. So what we could do, guys, depending on how we trade, depending on our system, and depending on our setups, I could say, okay, well, usually to enter a trade off of a 30-minute supply zone, I need a 5-minute candle to close red, and then I'll take that short and I'll put my stop loss at the high that was created in supply, and I'll target that next pivot low. And this could have been a fantastic trade setup to take. Other people might be looking for this zone specifically and say, okay, well, once I start to see we push into this zone and sellers step in, I'm going to have enough confidence to say we shouldn't break higher. And when I know that we shouldn't break higher or my analysis is incorrect, that's exactly where our stop loss should be. And then look how great of a risk to reward this becomes because you trusted your setup. A 7-1, almost an 8-1 risk to reward. Guys, that would be risking 100 to make 800. Then you could take 5 losing trades, 6 losing trades, and still be profitable by $200-$300. That is what's so mind-blowing about the market, about day trading, and even about futures, is because it gives us that opportunity. When it comes to day trading options, we have to deal with other factors like Greeks, the time decay, which is theta. We have delta, gamma, vega. There's so many different Greeks to worry about, whereas futures is strictly price action. If you're able to give yourself good setups where minimum you're looking for is a 2-1 risk to reward, you're able to be profitable with just a 50% win rate. And guys, I cannot stress enough how important that is, because it will help you so long term in the psychological aspect. Because if you're able to take 2 losses and know that, okay, that's fine, my next winner, next time I take a winner, it's going to take over these losses for me. That will help your mindset, because if you take 2 losses and you're feeling down on your account, that's going to bubble up the emotions, fuel FOMO, and cause you to take trades that shouldn't necessarily be taken. You got to remember, guys, your next trade has nothing to do with your last trade. Your next trade has nothing to do with your last trade. If your last trade was a loss, your next trade, you're starting fresh. You need your new confirmations again. You need your zone analysis. You need everything to line up perfectly, just like you would any trade. And again, psychologically speaking, that will help you in the long run. Say, okay, I took 2 losses. Like today, this morning on ES and NQ, I took a loss on ES. I took another small loss on NASDAQ, but then I was able to make it back. I was down only about $270 on the day. Now I'm down only $30 on the day. Whereas yesterday, I had 2 green trades and I was up $560. So for my winning days to be about $560, my losing days to be max around $270, $300, now only $30. That's what we're supposed to be doing as traders. We're supposed to be minimizing our risk, maximizing our reward. If we can keep our green days bigger than our red days, fantastic. If we can keep our green trades way bigger than our red trades, also fantastic. That's exactly what we're looking for, guys. Risk management's important. Understanding market structure is important. Everything is so beyond important when it comes to trading. It's not just one thing, guys. We have to think of trading like building a house, right? Or even like the human body. We don't just have a brain and we're able to walk around and move. We have a brain, we have a heart, we have organs, we have arms, we have legs. Building a house, you don't just need a blueprint. You don't just need the foundation. You don't just need the roof. You need everything. You need the roof. You need the siding. You need the walls. You need the windows. You need the doors. Trading is the same thing, guys. You need to understand some type of market structure, like a supply and demand. You need to understand good risk management, like finding good 2-1, 3-1 risk to rewards. You need to understand finding key levels. That's also very important. A lot of traders feel like, oh, well, support and resistance, that's very bland, that's very basic. Guys, absolutely not. Absolutely not. The whole goal, the whole point of trading is to be able to simplify it to the point that we're able to wake up in the morning, do our pre-market analysis just like we would any day and every day, and follow through with it. Not to try to force things, not to try to make things happen that we aren't really seeing, or things of that nature. Guys, I have some slides I wanted to cover of what are futures, how they move, just some sort of basic stuff for anybody who's new to futures. So this is the ES, this is the NQ, crude oil and gold, and how much they move. This is the minis. So the next slide, this is the micros, MES, MNQ, MCL, MGC. And then this is the minis, ES, NQ, CL, GC. ES moves $50 per 1 point. NASDAQ moves $20 for 1 point. So right away, it sounds like ES moves a lot stronger, but we have to remember NASDAQ has a lot larger of an ATR. So what we see here on ES on this chart example, ES was between 59.40 and 59.60. It's got a 20-point range. NASDAQ, on the other hand, is between 320 and 420. It's a 100-point range on NASDAQ. So NASDAQ is a lot more volatile than the ES. So you got to be careful when trading it. Crude oil, $1 is $1,000, but we have to remember crude oil doesn't move by ticks. Crude oil moves by penny increments, almost like a stock would. And then GC, $1 is $100, and 1 point it does by 1 tick. So 0.10 instead of 0.01. That's $10. Micros move 1/10. So if you're looking to trade NQ, but it's very volatile, then maybe trade 4 or 5 MNQ contracts so that you're able to manage your trade. You're able to scale in, scale out, and trade appropriate with appropriate stop loss and appropriate risk to reward. MCL is $1 per cent. MGC is $1 per tick. Excuse me. And then futures hours, guys. Of course, futures markets are open 23 hours a day versus the stock market New York session, which is only open 6.5 hours. We have our New York session from 9:30 to 4 p.m. We have our Sydney session from 6 p.m. to 3 a.m. That's the one that opens markets for us. Our Tokyo from 7 p.m. to 4 a.m., which overlaps with our Sydney. And then our London session, which I thought opened at 3 a.m. I do apologize if I haven't marked that as 2 a.m. on here. And that goes into 11 a.m. So this one overlaps with the New York session. So a lot of traders wrap up their trading day, me as well, around 11 a.m., right? A lot of volatility we get on the New York session comes from the New York Open, which is at 9:30, and then the London close, which is London's power hour between 10 a.m. and 11 a.m. So guys, here's some account sizes and the 30% rule, and this is why you really shouldn't be too worried about the 30% rule, especially when it comes to risk. So on a 25K account, your trail stop is $1,500. You shouldn't be risking $450 on a $1,500 account. When it comes to trading an evaluation account, a funded account, we want to be trading whatever our trail stop is. We don't want to be trading what our account size is, because if we trade what our account size is, we're going to have a much wider stop loss and we're going to be blowing our accounts much more frequently. 50K account, $750 is max risk on a $2,500 account. Even that alone, guys, that is a huge risk. We don't want to be risking that much on the table. So here's an example, guys, of the 30% rule. So the rule is designed to help traders control risk by limiting the portion of profits that can be put at risk at any one time. Guys, the rule is not here from Apex to try to stop you. The rule is here from Apex to try to help you. All of Apex's rules are guided and gauged to help you find consistency in the long run, because guess what, your 30% rule, when you're growing your account, your risk is going to get bigger and bigger along with your account size. So why start so big where you're breaking the rule? So if you're trading a PA account, 50K account, 25K account, 150K account, whatever the case may be, and your best day was $2,000, a lot of people might go, oh man, I just made $2,000 in one day. The 30% rule is going to wreck me. They're going to reject it. No, guys, just do the math to see what your total P&L by the time you take a payout should be if your best day was $2,000. And that tells me, okay, well, my total P&L should be $6,667. That would make $2,000 30% of my total P&L. So that's a great way to look at it, right? If your best day was $1,000, you would then do 1,000 divided by 0.3. Then it would give you 3,300 and whatever. So it's real important to use, really important to be aware of, and it's a rule that's here to help us, guys. It's not a rule that's here to try to make us ruin our accounts. It's a rule to help us save our accounts. So the trailing threshold, this is another one to be aware of. The initial trailing threshold. And guys, hit that like button. I know you guys missed it before, but don't miss it right now. Hit that like and subscribe if you like what if you like the knowledge we're dropping today. The initial trailing threshold is used to calculate the risk limit regardless of whether the threshold has been adjusted. Even if your trailing threshold decreases, your risk limit still references the original starting amount until you exit the safety net. So again, same situation, guys. You open a new 50K account, you lose $300 on it the first day. Your trailing threshold, it stays where it was. It's not going to climb against you if you lost money. It'll only climb against you if you start gaining money. So once you exit the trailing threshold stops, the rule shifts to 30% of your start of the day profit. So again, that's your start of the day profit, but if you're going for your total P&L and you're able to increase from your total P&L, you're able to take that payout. If your account doubles its safety net, the allowed drawdown can increase to 50%. So again, we're no longer looking at a 30%, we're looking at 50%. So if you accumulate 2,600 in profits and pass the safety net on a 50K account, your risk is calculated based on 30% of 2,600. But if your profits rise to 5,200, your trail down is now 50% of the 5,200, and now it's 2,600. Now you could risk what your total profits were before. So now you could have a full 50% risk, which again, personally, I wouldn't recommend that, guys. Risking, if you're in 5,200 in profit, let's say you're even trading an account that's $5,200, you don't want to risk $2,600, half your account on one trade. What happens if you lose that one trade? Psychologically, you're taking a big blow on your account. You're taking a huge hit. That's going to cause so much FOMO, so much psychological turmoil, and it's going to turn you off, and it's going to make you blow that account. So it's not worth it. So guys, here's some minimum required balances on these 25K accounts all the way up to the 300K. So the minimum required balance for a payout, for the minimum payout of $500, is $26,600 on the 25K. On the 50K, it's $52,600. So again, this one you're making $1,600 and you could take out $500. The 50K you're making $2,600 and you could take out $500. And then everything from there could be added to your P&L and to your payout. Now you must have at least 8 trading days since the last request to meet the minimum. So that's just something to keep an eye on as well. Now here are the maximum payouts for these account sizes. So the 25K maximum payout is $1,500. 50K is $2,000, and then these are all the other prices above that. As we see, it really doesn't start to move higher until we have the 150K. So if you go from the 50K is $2,000, the 150K is $2,750. But guys, let's think about it. Why have 150K accounts to have a payout of $2,750 when you could have 350K accounts and have $2,000 of a payout on each of those accounts? Then you're taking out $6,000 and you still have that full 150 of being funded, they say. So that's something to keep an eye on and to be aware of, is that you might not need a higher account. A bigger account doesn't mean a bigger payout. Remember that. Multiple accounts can mean a bigger payout. And there is no maximum payout after the 6th one, guys. This is huge. So starting on your 6th payout, you're able to take out whatever your profits are. So this is the max going through your or your 1 through 5 payouts. Then on the 6th payout, let's say you're on a 50K account, and because it's 5 payouts, that would be 5 times 8 for the 8 trading days, 35 trading days, and you were able to grow it from 50K to 75,000, right? You're able to then take out whatever it is minus the window. So let's say it's a $2,000 cushion. You're up 25 grand on it. You're able to take out that $23,000 off of your 50K evaluation account. You just have to show the consistency and get past that 5th payout. Here are some tips for each account size, guys, and then we're going to be wrapping up the stream very shortly. So make sure you're running that like button up. I do appreciate you all for tuning in, and drop a comment as well. So here's some quick tips and tricks. So 25K account, your goal is 1,500. Trail stop is 1,500. A very even risk to reward on that. But if you're risking 2% of a 25K account, that's $500 of risk. We are not risking $500 on a $1,500 account. Same with the 50K account. Goal is 3,000. Trail stop is 2,500. If you risk 2% of a 50K account, which normally is okay, not when you're trading a trail stop, it's $1,000. If your trail stop is at 2,500, you do not want to risk 1,000 per trade. Plus, that's also exceeding the 30% rule. So again, my tips for each account size line up perfectly with the 30% rule. And that's exactly what we want to be doing. This is another form, guys, of having structure. And that's so important when it comes to trading. Whether you have structure on your account sizes you use, structure on your trading strategy, everything should be so structured to a T that it is not, well, if the, maybe. There's no maybes, guys. You build a system, a yes or no system, and if you see a setup that works, it should have confirmations with it, and you should be able to take it with some confidence. Now check out the 250K account. The goal's 15,000, trail stop 6,500. That is a 2-to-1 on that. That is much harder to pass with such a smaller risk. So very important. Keep an eye on it. Guys, I hope this stream helped you out today. Do want you guys to make sure you follow us on Instagram is Benzinga, and my personal is Trading with Kev. Drop lots of knowledge on there. I'll see you guys all next week for Futures Fever at 11:30. Don't forget to fill out the form in the comments below for a chance to win a free Apex account. I will see you all next week. Take care, everybody.